Smart money, intelligent money, has halted any sale that has come its way, and the fact that we may see a bullish consequence afterwards will have a significant impact on the short-term crypto market. To understand the macro context of Bitcoin, as you can see, Bitcoin is currently hitting the ceiling of a macro channel. We will rely on the Ethereum chart for a clearer perspective. What Ethereum is showing us, as you will see shortly, is quite intriguing. It's giving us clues that the Bitcoin chart cannot provide in return. In the macro time frame of Ethereum, we also have an ascending channel, unlike Bitcoin. Ethereum is not at the upper extreme of its channel right now. Instead, it's quite the opposite. We're at a point where Ethereum has compressed against a highly relevant and macro structure. This is a consequence we've been observing in previous analyses, with the most probable outcome being a price increase in Ethereum. This is when we need to pay great attention to this development. The price has broken a crucial level with significant force, a strong bullish impulse. We've also drawn a volume profile for this entire range, and of course I find it very interesting to identify the point with the highest transaction volume. In other words, we're going to find where the point of control is. It's the level where the highest transaction volume has occurred within this range. We can see this reflected by this red line, and if we move it to the right, it won't surprise us. You'll notice that the price has almost precisely hit it. This, of course, needs to be taken into consideration as it represents an extreme in the market, without a doubt. But look, here we have this strong bullish impulse, and after breaking that crucial Ethereum trend line when we switch to a 1-hour time frame, we'll notice the following, and this is what's truly important for the crypto ecosystem. The price, after a strong bullish impulse, especially when it has just broken a relevant level, often establishes a defensive zone. How do you see it? This rectangle, if you observe, has been a zone where the intelligent money has not allowed the price to venture much beyond its predetermined level. As you can see, after each bearish attack, the consequence has always been a reaction in the opposite direction. With this in mind, let's focus on the following. Regarding this defensive zone, what we're seeing is a range. And at the price level of 1807, we have defined a creek, a very relevant level that the price has recently broken. But the important thing here is not just that the price has broken it, but how it has done so and what happened afterward. Now, you're looking at the order flow chart, and you're also looking at the Ethereum chart, with the yellow rectangle representing the defensive zone. This is where we'll pay attention to the delta, which seeks the difference between the ask and bid and displays it as a bar. A green bar indicates that the ask, the buying intention, has won over the bid. When you see a red bar, it means the opposite. The bid has won over the ask, indicating a selling intention is more present on that part of the chart. And what does this type of reading allow us to do? Well, take a look at the following. The price attacks a defensive zone, and in that same area, we can see a bid-oriented delta. In other words, selling was attempted here without any success. Then the price attacks again, and the bid appears once more. Again, selling was attempted, and the price never prospered. Another thing that stands out and is somewhat different from what we've been seeing lately is that in this bearish impulse, it genuinely involved selling from top to bottom. We can determine this through the delta. Indeed, this type of event, in which we see a continuous downward movement in multiple candles during a fall, is a clear anomaly and not typical. This should be considered because it indicates that this bearish impulse is entirely genuine, and it might lead to a corrective pattern that we'll evaluate to see if it intends to pursue a bearish replication. That's what we'll explore in this video. But before that, what we're going to do next is analyze what has happened in these hotspots of the defensive zone. Specifically, I'm going to show you how, in this chart, in an objective manner, the smart money has abruptly halted any sale attempts that came its way. The fact that there might be a bullish consequence afterward will have a significant impact on the short-term crypto market. Let's zoom in and look inside the candles to see how Ethereum has been auctioned in this range. When we observe the first drop, what catches our attention is the appearance of buying. Who would be brave enough to buy at this point during a climactic downward move? I can tell you it's the smart money. It can't be otherwise, especially on a defensive zone. Selling attempts are made here, but who would attempt to sell in the face of a defensive zone? Clearly, it's the retail investor, and then in this cluster, we can see the buyers. Once again, the smart money makes its presence felt, continues to buy, and here we see absorption and subsequent buying initiation. This suggests that the defensive zone has played the role for which it was designed. Moving a bit to the right, here we see very volatile action, which is not very interesting to observe. If we move further to the right, we see selling intentions that don't prosper. We have a reverse consequence. What's more important is that in the next attack on the defensive zone, it appears that strong buying intentions have already begun. The smart money has noticed that retail investors have learned where to buy, which is is a good enough reason to open the floodgates and set a market trap on the defensive zone. These types of events, these market traps on structures, as you well know, are something we continuously work on at Crypto Insight, and they are genuinely interesting when we are looking for a trade. Regarding the trap, as expected, buying has already started on the defensive zone. Then we see sellers, not too many, but they are there, and the delta clearly reveals it. Therefore, in this candle, there was a strong attempt to sell, as indicated by the volume and the delta, but the price was unable to immediately progress. In fact, in the following candle, we see these sellers once again at a price level where initiating a sale is not prudent at all. Attempting to sell the breakout of a defensive zone without a justification on the left side, an event that did not exist. This selling attempt is highly imprudent and was certainly led by the retail investor. This is when we can assert that the effort does not correspond to the result that was absorbed in a trap scenario. The rest is history. And now you'll understand why what we're doing is so important. Let's move a bit closer to the present, and here you'll once again see a strong selling intention on the defensive zone. Pay attention to the volume and delta, indicating a significant intention to sell. Who would dare to sell at this point? I'll let you leave that answer in the comments, but I believe you already know very well. And of course, the price did not prosper. Moving further to the right, I want you to pay attention to this event. Let's zoom in on it. You can see that in this last attack, there is selling presence that starts from the creek. Just look at how the insides of the candles have turned red. Observe the delta, and most importantly, when they decide to attack the defensive zone with great fury, we see an increase in volume, and the delta is clearly oriented toward the bid. There is a selling intention here. Now look at this cluster. It's where the most significant attempts to sell have occurred. Buying starts at the same level. Selling attempts continue. More selling attempts continue. Do you see how they have blocked any selling attempts? This leads to a gap on the defensive zone, and this time, the smart money did not allow the price to reach that liquidity on the defensive zone. They blocked it much earlier. This is an essential development when we observe such a blatant selling intention that fails to push the price down, and that doesn't allow the price to move even a bit lower from then on. This is clear manipulation, and that's why we shouldn't be surprised by such an aggressive bullish breakout. Now, tell me in the comments if you find this advanced technical analysis interesting. And of course, if you're enjoying this video, let me know in the comments, like the video, subscribe to the channel, and click the bell icon to be notified of future posts. Now, what we have is a strong breakout of the creek at these levels, so it's not surprising that we have this accumulation of orders. This is an important point. Although it's not marked on my chart, we remember it by heart. And now the price has gone to the breakout point, to the creek, to see if it can break through or not. This is certainly a crucial zone for any investor. For now, we see that the delta is clearly tilted toward the bid. There is a selling intention at a relevant level. We'll see if this develops or not, as its implications for the short and immediate term will be decisive. Regarding Ethereum, we can be positive about its price because we've seen this absorption, this trap, this absorption. We've seen how they defended this zone, causing a gap in the market, which they subsequently broke with great force. All of this suggests that we should be optimistic about the short-term outlook for Ethereum. So what can we expect in this positive scenario for Ethereum? Well, we can anticipate a flat pattern. Why not expect a trap? It could be a scenario where Ethereum recovers, breaks through the flat pattern, and takes us to higher price levels. We would be looking for these levels at the channel's peak. Essentially, we're aiming for an institutional target approximately 1-to-1 from this accumulation process. So I've already told you what my preference is, which is to be bullish. But as you know, smart money can also fail. When we see smart money fail, the opposite consequence often occurs like a cascade or avalanche. What does this mean? Well, if someone wants to bet on the failure of smart money to push the price higher, the interesting zone to enter a potential short position is by waiting for an upthrust, a trap at a level that matches the middle of this channel. Here we'd be looking for a double touch, a favorable area to bet on the failure of smart money, a great position to attempt a short, and this would be confirmed if the price reclaims the creek and validates it. This type of event could push the price of Ethereum not only to the channel's base but possibly below it. I don't prefer this bearish scenario, but without a doubt I will react to the market. I'll see what opportunities it offers and act accordingly, setting ego aside. That said, I've already exposed my directional preference. In this case, for the short term on a 1-hour chart, I'm bullish. In a very summarized manner, for Bitcoin, we have identified an interesting zone on the H4 chart. As you can see, it's clearer on the H4 chart. You only need to observe the candle bodies and wicks, how they've acted, how they've compressed the price against this zone, how they've broken it, and now the price is reacting upwards accordingly. So what we need to evaluate is whether this bullish impulse intends to replicate itself. It may even aim to fail, as the failure would involve revisiting this structure. So if there is an idea to keep moving upwards, which is favorable to the Ethereum analysis and what we're seeing in Bitcoin, even in the search for a bullish harmonic pattern in the event of Ethereum's failure. In the worst-case scenario among the positives, we have room to go up to here. And just as I was warning you about what might be happening with Ethereum, in the opposite case, you're going to keep an eye on the upthrust. Look here, there's a pretty clear peak in Bitcoin that it later breaks through, as if nothing happened. It will be very interesting to see if Bitcoin can now break through this level. Because if it can't, and it gets compressed here, in that scenario where Ethereum fails with its flat pattern and has to look down, Bitcoin would do it using this kind of structure, taking advantage of that upthrust, that trap. It's most likely that Bitcoin would do so using this type of structure, taking advantage of an upthrust, a trap. I hope the message is clear, and I've shared my directional bias with you. I won't be looking for long positions in Bitcoin. I would do that in Ethereum in any case. However, it would be a late entry, but if you ask me, that's what I would be observing. Now, leave your opinion in the comments. What will you do in the market? Are you looking for buys or sells? What will you prioritize? And if you like this content, please like the video, subscribe to the channel, and click the bell icon to be notified of future posts. I hope you have a great trading experience, and until next time.